Sanit, hi, good to have you with us. How have you been?
Hi Ashu, I'm really well. How about you? All good?
Doing very well, Sanit. Excited to have you with us. This is a section that we've started to, do at Asia Tech Journal, where the idea is to bring in some of the leading angel investors in the country, to come in and, speak with us. The idea largely is to build a lot of knowledge and understanding within the founders, and essentially help investors put out their perspective in terms of what are the things that they're looking at, right? The market is now becoming very, very dynamic. I think it just becomes so much more important in these times, right? We're in a time zone where things have changed. The markets have transformed phenomenally. The consumer awareness has gone through the roof, right? We're not in an economy which used to operate at many levels, right? We're becoming one large market, right? The trends are becoming so much more clear. Information is available with everybody, right? Now the sensitivity which you need to handle capital is just so much more important, right? And it becomes important that investor side perspective becomes all the more clear. There are not a lot of people who have been able to gauge the change, right? You've been one of those investors who's been leading, the thesis of this entire change, right? And thus it becomes important to capture all of that in this conversation. We're going to do that through the course of the conversation. Sanat, before we do that, a quick round of introduction will be very helpful, and then we dive into, talking about your investments portfolio, India post 2020, and the world becoming one large economy. But like I said, before we do that, a quick round of introduction will be very helpful.
Sure. So Ashu, I come from a family business background, where I've run a textiles manufacturing business for over 10 years. By education, I've studied bachelor's in business administration, and then I've gone abroad to UK to study MSc in innovation and entrepreneurship from University of Warwick. So, family business was something that I did for 10 years. Business and entrepreneurship has been in my blood, and that's something I'm very passionate about. We sold that business in 2019, and then we started investing in the private equity markets. So that could be early stage, growth stage, late stage, throughout the horizon. Apart from that, in 2020, I co-founded this agency called the G Story with my wife. Now that's a content creation agency. It's something very unique that we are doing in the Indian market, and we are one of, I think, the only players right now doing what we are doing. So yeah, that's a bit about myself: entrepreneur, business, and investor.
Super. Sanit, we're going to save the G Story conversation for our next conversation, right? Where we have your wife and co-founder in that session, right? Because that in itself is an interesting and incredible topic to talk of, right? I think communications, and I think be it visual, be it textual, be it audio, I think it's just become so much more phenomenal as a medium, right? So we're going to save a lot of that for our next conversation, right? But given we are here, focusing and going to be talking about your investments, right? I'd love you to give us a run through of the portfolio that you are currently invested in. There are some very interesting companies. There are some companies that have really changed the course of how the markets in India have been, right? WebEngage is one such company, and there are many others, right? I would rather let you talk about it, right? So just take us through your portfolio, and what are some of these companies doing? I think be a great starting point.
Sure. So when I started off investing, social impact was something that I was very conscious about. When you're deploying capital into companies and when you're enabling founders, with that kind of capital, you want the capital to go to, companies that are able to make a change.
Right.
So I started off with Pariksha. Pariksha basically is a edtech company, but they are bringing education to Bharat, which is the rural India. So they're they're basically making education more accessible and affordable.
Right.
And they are enabling, the population of Bharat to get employed to state government jobs. Now that was something that I found, profoundly impactful, and I thought it's going to change the way India is today. So that was one of our initial investments, and then I think a couple of strings have always been towards social impact. One of my biggest bet is into EV revolution, which is creating charging infrastructure in India, because that is the need of the hour. We are talking about green mobility. We are talking about how can we transition into electric cars, and that can only happen with charging infrastructure. creating a network of chargers across India. So Charge Zone is my, one of my other investments, which is, doing phenomenally well, and they're creating this entire network of chargers across India. Apart from that, I've also done something in the drone logistics sector. Where you're supplying healthcare, medicines, blood, plasma to rural India, where a vehicle would typically take 5 to 6 hours. These drones take less than half an hour, and they're delivering these life-saving medical equipments in a very short time. So that is something that is something that I'm really proud of. And then, of course, like you said, WebEngage is a phenomenal company. They are democratizing how technology can change consumer behavior. There's Trika, which is changing the way you are investing in private equity. So they're creating a digital platform to transact in private equity. So that's going to be something that will change the course of private equity investments going forward. There's Landmark Cars, which is already a massive company now. They're India's largest auto dealership, covering Mercedes-Benz, Honda, Jeep, Nissan, Volvo, not Volvo, Renault, Ashok Leyland. So they have a network of about 125 dealerships across India, and they are playing the consumption game on automobiles in India. If you compare ourselves to the Western countries, so across the horizon,
very interesting.
Playing out social impact, consumer, all the themes together, and I think India is a massive opportunity.
Yeah, I think I couldn't agree more. Right now, Sanit, I would have asked you this particular question a little later in our conversation, right? I think, but given that you've taken me this elaborate portfolio that you have, right, it's such a diverse portfolio. I think I have no choice but to ask you, right? What's the thesis of investment, right? You've been a businessman, right? Now, when you are looking at an asset, is there a sense of it, or is there a certain evaluation that you do from a consumer standpoint, right? I think that balance is very important, right? Looking at it from a business standpoint, but on a lot of occasions, when you're looking at it from a business standpoint, an opportunity standpoint, a growth standpoint, right? I think there are certain biases that automatically kick in, right? Especially when you've been an operator. The consumer sense, the consumer side of it brings in a lot more rationality, right? It just helps you understand the necessity and need for something, right? So is this a combination of the two, or being a Gujarati and being business first in many ways, right? And being having that operator mindset, right? Does that sort of supersedes everything else? Would love to understand that.
So the way we operate in is I like to take a balanced approach. Whereas you let your strengths weigh in for the decisions that you can make, and then you sort of take advantage or use your network for the sectors that you don't have expertise in. So like you said, being a Gujarati, we understand business. So I would rather analyze the business side, the unit economics, the financials, those kind of projections internally. And whereas the consumer-centric rationale that needs to be sort of understood is taken externally. I talk to a lot of stakeholders. I talk to a lot of consumers. I talk to founders who are operating in a similar space. I would, go out in the market, do a research, and then, take a decision. For example, e-mobility. Okay, that's a sector where the market never existed when we took that bet. So for us to sort of understand that would be difficult. So you need to go out. You probably need to go overseas. You need to understand what is happening in more matured markets.
Absolutely.
Talk to stakeholders and then take that call. So it's I always feel that it's more of an advantage to sort of understand the overall ecosystem by talking to people outside, understanding their POV, and then taking a conscious decision. So play out your strengths.
Interesting. Now, Sanit, an important question, right? Now, when we talk of India, and I'm sure each one of us will agree on this particular piece, right? That we are not one market. I think I'm going to address the 2020 question completely differently, and in just a bit, right? But before we do that, India is not one market, right? India has many, many markets. We have a lot of our regional challenges, right? The patterns of consumption are not homogeneous, right? They're very inconsistent. We have cultural baggage as well, right? Now, when you're looking at an asset, do you look at the homogeneity, those elements, right, in that business, or have you taken bets which could be regional to start with, but as the trends play out, as the market evolves, they could become part of the consumption process from a consumer standpoint, right? Is that something do you evaluate homogeneity? How important does it become in your decision process?
See, the good part about India is that even though India is fragmented into multiple markets, but it's still big enough for those individual markets to self-sustain these companies, right?
Right.
The country is so big, the population, the per capita consumption is so massive that it is still enough for a company who has the potential to be a market leader in itself to grow exponentially in that particular geographic division as well.
Right.
And then it all boils down to the founder's capability as to how he's able to leverage the technology, his own expertise, and his team strength to sort of grow out into the larger Indian market, into other geographies. So, homogeneity is something that I would say it plays a big role to, become a multi-con or a unicorn. But as an early stage investor, it's not so much of an important factor to invest in, because when you come in at a seed stage or a pre-seed stage, you are playing out that game till you are either exiting at Series A or a Series B. And in the Indian market, even with those small geographies, is big enough to let you ride that wave and take an exit at that stage. So it all depends on when you are entering these companies.
Right. And when would you like to enter these companies? Let's try and answer it that way.
I think that's a multi-billion-dollar question, because every investor is sort of understanding what is the right sector to play out. Is it because every stage you enter in has its own pros and cons.
Right.
But I think a very definitive way to look at it is when you're investing in private equity.
Right.
If you invest $1, the negative side is you're going to become zero. Right. But if the company does well, the upside is unlimited. It could be that $1 could be $1,000, or it could be $100,000.
Right.
So your negative side is always restricted because it only has the potential to become zero. So then you need to understand whether when you enter at a pre-seed stage or at a seed stage, your multiple is massive to grow.
Right.
Whereas when you enter at a growth stage or a late stage, your multiple possibility is not so much.
Right. No, I think what I sense is the undertone of what you're saying is the earlier the better, right? Which is no, I completely agree, right? And trust you me, Sanit, this is the second time that I'm hearing this argument in the last 2 days, right? Where your bottom is defined, right? What the loss could be, but what the upside could be is it could be beyond imagination, right? And I think that's been true for many investors, and especially the last 2.5 years, right? We've seen some amazing surge, right? Possibly you've seen that in a couple of your companies in the portfolio. It's been a phenomenal run. Now, Sanit, no conversation today can be complete about without talking of 2020, right? And I think and that's been an absolutely important critical event, right? I think it's been a transformative year in many ways. We never anticipated an event like this. While of course it's touched us at personal level, each one of us at personal level, also at a business level, right? But from a market standpoint, it's been a phenomenal phase for us, right? It's transformed us. We've become an information-first economy, right? We had geos of the world, and that continued to be the argument for a lot of digital adoption, right? But the pace of digital adoption that has happened in the last 2 years is nobody could have ever imagined, right? But possibly these numbers we would have touched them in 2030, right? We've just done that in 2 years. Like I said, right, we've become an information-first economy, right? Now, in an environment like that, we're consuming from just about very, very clearly defined mediums, right? what has also happened is that there is a global liquidity event which has happened, right? And we've seen a huge surge in capital injection in the country, right? Where the leaders have been established much faster than we would have anticipated, right? What has happened in an environment like that, right? Especially for a lot of angel investors, and I think that has sort of added to the complexity. I'd love to hear your views on this, right? Is that the risk of investing, while of course it's that 1 rupee versus the bottom, a defined bottom versus the unimaginable upside, right? But the risk has increased in investing, right? CACs have gone through the roof. The consumer awareness is touching a very different kind of a level, right? Fads are going to fly very, very fast. Product consistency from an engagement standpoint might not be as predictable, right? So we are in for this is like the wild west in that space, right? It's very complex from an investor standpoint. You are somebody who's coming in very early, right? The possibility of risk is the highest at that stage, right? You're literally sort of, putting money on that venture which is just come out, right? In many ways, right? And of course, we still have our complexity, right? Growth could be a very different kind of a challenge. Communication could be very, very expensive in the process, right? We're talking about a very different kind of an ecosystem, right? Which is, like I said, not predictable at any level. Consumer level, business level, cost level, resources level, right? It's all become very dynamic. What's your sense of it? How do you break it down?
So 2020, sort of acted as a catalyst to growth, I would believe. It was that moment where, we got an opportunity to accelerate adoption of technology. This was a moment where a lot of companies and a lot of founders took advantage of, and they sort of, jumped into the wagon and created opportunities and found certain problems to solve. To answer your question, I feel that, inconsistencies and risks are a part of this game. Even if you, and that sort of, shows also on the public equity markets. If you look at the Sensex, and if you look at the companies, the 200 companies on Sensex, the amount of years, I think there are hardly 50 companies that are above the 7,500 crores market cap. Whereas if you see the private equity market, I think in the last 2 years we created those many unicorns.
Absolutely.
So it all, I think, boils down to the capabilities of the founders, and as when you look at me taking early stage bets, my predominant factor is the founder and the founding team. Because that is something that is going to make or break the company, and that is something which is going to sort of help in deciding whether a 2020 sort of a year is going to be critical for them in shutting the shops or opening new doors.
Right.
With the war situation happening, with the oil prices, with the n number of inconsistencies in the economy today. It's the talent of the founder and the founding team, the core team, that is going to decide how they take advantage of these events. So I feel technology is at one point, and the technology is a function of what the team does.
Sure.
So that is my mantra. Basically, I spend a lot of time understanding the founder's mentality, his experience, their education, what they have done in the past, and how they can leverage that for the future. Because what happens with the world or with India is going to be consistent for everybody.
Right.
But what does your founder do with that event is what matters.
Interesting. I like how you're doing it, right? I think that's possibly the only constant, right? I think that's essentially that's the point that you're trying to make, right? That your founder is the only constant, right? And the founder has to be very, very bankable, right? I think exposure really becomes very important in that kind of a situation, right? Now, Sanit, the counter argument on this particular point is, right, that not even a lot of founders, for example, there is not very clear data which is done, right? A lot of data is still getting captured, right, in terms of how the behavior is coming in, how it's shifting, how, for example, narrative is getting built, right, how consumer is getting influenced, right? So there are like a lot of these pockets that are there, right? You don't necessarily make very clear understanding of the trends that are going to play out, and they just happen. And by the time you realize that they've picked up, they start fizzling out, right? I completely understand, right? I think that element of hustle is very important. That characteristic of integrity and honesty is very, very important. That dynamism is very important, right? That sharpness is very important in the process. the fact of the matter is that all of what is happening is so inconsistent, right? That you could any one way you go wrong, it will possibly lead into a bad result, right? The environment is getting very harsh, by the way, right? Where your cost, like I said, right, the cost of acquisition is going through the roof. So one mistake that you've committed, one, it's going to be very expensive as a thing, right? To recalibrate yourself and re-energize the team and get back into that game very quickly, I think is going to get expensive. Is my fear. But I think you still have the founder is still the most bankable asset in any startup, right? And I think that's not going to change ever, right? Founders will eventually pick their ropes, and I think it becomes important in your capacity to identify the right guys. What becomes an important question, right? And also a natural question in this is that, what are some of the characteristics that you look at when you're looking at a founder? How important does, for example, experience become, right? How important does tenacity become? How important does failure become in the process? Would love to understand. What are some of those key characteristics that you look at, right? Is there a process to it, or is this very conversational in many ways, where you try and understand, gauge, put him or her across situations, and you get to a point saying that, I think this is somebody I want to back, right? What's that phase like? I'd love to understand that.
So, I think the trend that I've seen in my portfolio companies is that I've always, gone for founders that come with some sort of prior experience in the in their professional, experience. I've not really been able to back, founders that have sort of just come out of college or, freshly graduated, because, I always feel that the power of experience is something that, weighs way more than education. Right. So not necessary that, if I go to evaluate my portfolio companies, I won't see a large weightage on IIT or IIM graduates. Right. Because, there's a certain weightage that kind of education can add, but then there's a lot that experience can,
Absolutely.
Weigh in. Apart from experience, I feel, agility is something that I really, like to understand and gauge from the founders. How right. Agile are they, and how responsive are they to different experiences or different right. Scenarios in the market.
Right.
For example, if you take Avlesh Singh, founder of WebEngage, he's been through a pivot. Right. When WebEngage first started 10 years back, they were doing something completely different. Right. And then he was able to sort of understand what is going wrong with the company and how can he leverage the market to sort of pivot the model and come up with a product that has a better product market fit. And right. that has catapulted the company and created the WebEngage that there is today. So it is this ability of a founder to sort of understand his weakness, to understand the company's weakness, and right. where are they going wrong. And you'll meet founders who are constantly denying or trying to defend themselves, trying to prove to the world that they are still correct. Whereas they might not be, and they don't need to right. be. Nobody is correct, and nobody needs to be correct. If you right. are able to sort of understand where the fault lies or what are you doing wrong, and if you correct that situation, you will be able to sort of succeed in a far better way. So it is. I try to find these nuances in founders. Where how do you identify whether they are able to accept their flaws and their sort of weaknesses and convert them into strengths and opportunities.
Interesting, right? No, I think denial is the most expensive mistake, right? And I think in a market like India, I couldn't agree more with a lot of these points that you've highlighted, Sanit. I think agility is just so much more important, right? I think your ability to, if you're going down that wrong path, right, your ability to visualize it, your ability to anticipate how the result is going to play out, and the universality of, for example, acceptance in many ways. I think exactly. It's just important, right? And I think very quickly changing your course of action becomes very important, right? I think that really calls for a very focused entrepreneur. That calls for experience happens and helps a lot, right? Because then you're able to sort of navigate your teams with you, because eventually they're the ones who want to deliver, right? You'll be able to manage your stakeholders better. I think all of that is very important. You need, in an environment like the one we are in, you really cannot find it out with some level of exposure, right? I think that just becomes so much more important. Campus innovations continue to be very important, but I think we're going to see very different kind of campus innovations that are going to come out, right? I think for transitioning opportunities, right, which are essentially from offline to online, we'll need seasoned entrepreneurs to sort of create and fill those gaps, right? I think campuses, we're going to find more Facebooks coming out, right? Very different kind of differentiated model, right? The newer world models, and I think the other generation is going to be little late adopters, but I think we're going to be fillers in the process. And I think both of them are going to have their own roles to sort of play. Sanit, towards the end of our conversation, in this leg of our chat, right? What are some of the things that you're looking at, right, going forward? What are some of the things next 12, 15, 17 months? What are some of the areas that you're particularly looking at from an investment standpoint, right? What is looking exciting to you? You have a bunch in the portfolio. You're an LP in a couple of funds. You have a services business. That's a very unique combination of experience, right? Makes a judgment important at many levels, right? What are next 12, 15 months like as an investor, as an angel investor?
I mean, if you speak to any investor, today in the global ecosystem, Web3 is something that everybody is, waiting to see how it plays out, because there is so much. When you say Web3, even though it's only 4 characters, there's a lot, happening behind those 4 characters, and we don't even know 10% of it, So I think the next 12 to 15 months are going to be those of, sort of understanding, exploring, and, gathering knowledge of what could be the possibilities. Because India, if you go to speak of it specifically, we are, still scratching the surface as far as Web3 is concerned. We've really not gone that deep into it. So I think Web3 is something that I'm sort of trying to understand, and I'm trying to demystify as to what could be that, sweet spot, to play out for a longer cycle. Apart from that, I think the consumer story is, massive. I feel there are some, exceptional founders, who are doing some great stuff. Also, like you said, with this whole, the IT, the internet sort of penetrating into India, the consumer story is only going to play out massively. So if you are, sort of understanding the consumer market, then I think there is immense opportunity lying there, and I think a lot can be done. So I think apart from Web3 and consumers, I think I'm not looking at anything specifically because these 2 opportunities are massive in its own way. So I think
And I think you can always continue to back great founders, right? I think that's always an evergreen strategy. That's an evergreen strategy. I think that you really can't go wrong, right? I think which has been a very core part of your thesis, Sanit, right? Last question in this conversation, very cliched, right? But I think important at the same time. I usually use this section of my conversation as a giveaway, right? And when I say a giveaway, it could be an advice, suggestion. Typically it's focused towards entrepreneurs, right? It's a lonely journey. It's a journey which is very difficult. You have to answer for a lot of things, right? It's only you who can see the future. A lot of people come with opinions who are not necessarily, not a lot is at stake, right? It just becomes so much more important to have more and more of that, like I said, suggestion, advice from right stakeholders, right? It's also become very important to handle money responsibly, right? You're doing, Sanit, all of it together, right? You're also helping and participating in rounds of these businesses, but you're also bringing in a lot of execution intelligence. You're supporting these founders at many levels, right? You're bringing in a community to sort of, help them leverage, right? And possibly grow much faster than what they would otherwise, right? If you give out that suggestion, advice, what would that be? I think that'll be a great ending to this conversation.
I think what you need to understand is that there's massive liquidity in the economy today, and capital is abundant.
Right.
If you're raising a round with a good business idea, there are more chances of you getting funded than not funded. As an entrepreneur and as a founder, what you need to understand is, after introspecting, what are your weaknesses and where do you need help, and raise funds accordingly. So see, there are 2 things, right? Either you raise too much capital and you don't know what to do with that capital,
Right.
Because that's a very likely scenario these days. And the second scenario is when you raise capital, you raise enough capital, but from the correct people.
Right.
So smart capital is something that I would, always recommend to my founders and any other founders, who are raising capital. Because if you have the right partners, if you have the right investors to go along your journey, I think you can go, way further than you would have ever anticipated. Because when you get the right investors, they come with a lot of experience, they come with a lot of knowledge, they come with a lot of network and understanding on the market. And that is a compounding effect which, will massively help you in a long way. So I think raising capital is an art, and I think if you are able to understand who are the right partners for you and how much do you need to sort of raise, I think that will sort of take you a long way in the journey.
Interesting. That's
my 2 cents.
That's a great takeaway, right? I think the way I like to put it is that, if you can get a lot of people to be part of your growth journey as stakeholders in some form or other, it's phenomenal, right? Have as many heads and legs and heads to come in and support you, right? There's nothing better. And I think that's essentially what you kind of said, Sanit. Sanit, thank you so much for doing this, right? An extremely, focused conversation, an extremely sharp conversation at many levels, right? Where you identified, what are things that are important in an environment like that, right? Environment is something that you cannot really control. Systemic issues is something that you cannot really control, right? You'll always have to deal with it, with the way kind of it shapes up, right? The only way you can possibly do it is by being agile, right? By being attentive, by understanding, how is this going to percolate in the larger economy, right? And what your solution has to, for example, do, right? Or what your business, how your business has to act and react to a phase like that, right? A phenomenal conversation, Sanit. Thank you so much for doing this. It was a pleasure to have you with us.
Thanks a lot, Ashu.
Continuing this conversation in the second leg, where we discuss more about your portfolio companies, we dissect them a little and understand your thesis in a little more detail of your reasons of investing in these companies. What is it that they're doing with the founders of these companies? It'll be a phenomenal one, right? I look forward to doing that one much sooner. And thank you once again. It was a pleasure to have you with us.
For sure. Thanks, Ashu. Appreciate you. Bye-bye.